DeFi versus traditional finance, the future of money. Hey everyone, it's cryptokrytonite, and today we're diving into the revolutionary world of decentralized finance, DeFi for short, and how it's shaking the foundations of traditional finance. We're talking about cutting out the middleman, the banks, and putting the power back into the hands of the people. Now, DeFi is still in its early stages, but the potential, huge. Think about it. Lower fees, faster transactions, and global access to financial services, all thanks to blockchain technology. But it's not all sunshine and rainbows. DeFi presents some serious challenges to the way things have always been done. That's what we're going to unpack in this video. The good, the bad, and the future of money. Before we dive in, make sure to subscribe to our channel for more insights on the future of finance.
Let's kick things off with the top 3 DeFi trends that are turning heads and making waves. These trends are not just buzzwords, they are fundamentally changing the way we think about finance and investments. From innovative liquidity solutions to the digitization of tangible assets, DeFi is opening up new avenues for financial growth and inclusion. First up, we've got perpetual liquidity pools. These pools are revolutionizing the way liquidity is managed in the financial world. Unlike traditional liquidity pools that can dry up, perpetual liquidity pools are designed to remain constantly filled, providing a steady stream of liquidity for various financial activities. Imagine a giant pool of money that never runs dry, where you can lend your crypto, earn interest, and even borrow against your holdings. This concept is not just theoretical, it's being implemented in various DeFi platforms, allowing users to maximize their crypto assets' potential. That's the power of these pools. They provide a seamless and efficient way to manage liquidity, making it easier for users to access funds when they need them. This is particularly beneficial for those who want to leverage their crypto assets without having to sell them. They're completely automated, transparent, and they're making traditional lending look like a dinosaur. The automation ensures that the pools are always balanced, and the transparency allows users to see exactly where their funds are going and how they are being used. Next, we've got the tokenization of real-world assets. This trend is bridging the gap between the physical and digital worlds, making it possible to own and trade tangible assets in a digital format. Think real estate, art, even collectibles, all being converted into digital tokens on the blockchain. This process not only makes these assets more accessible, but also adds a layer of security and transparency that was previously lacking. This opens up a whole new world of investment opportunities, fractional ownership, and increased liquidity for assets that were previously illiquid. Investors can now buy and sell fractions of high-value assets, making it easier to diversify their portfolios and reduce risk. It's like taking something physical, turning it into a digital asset, and suddenly you can trade it globally, 24/7. This level of accessibility and flexibility is unprecedented, allowing investors to take advantage of market opportunities at any time, from anywhere in the world. And last but not least, we have yield aggregators. These platforms are designed to optimize your returns by automatically moving your funds to the highest yielding opportunities available. These are like the robo-advisors of the DeFi world, constantly searching for the best returns across different lending platforms and automatically reinvesting your money to maximize your gains. This automation takes the guesswork out of investing, allowing you to focus on other important aspects of your financial strategy. It's like having a personal finance assistant working tirelessly behind the scenes, making sure you're getting the most bang for your buck. With yield aggregators, you can rest easy, knowing that your investments are being managed efficiently and effectively, maximizing your returns with minimal effort on your part.
Now let's get down to brass tacks. The financial landscape is evolving at a breakneck pace, and at the heart of this transformation is decentralized finance, or DeFi. Why is DeFi causing such a stir? What makes it the talk of the town in financial circles and beyond? Well, it all boils down to the key advantages it offers over traditional finance. First and foremost, transparency. In a world where trust is often in short supply, DeFi shines a light on every transaction. Every transaction on the blockchain is recorded and publicly viewable, eliminating the need for trust and reducing the risk of fraud. Imagine a world where you don't have to take someone's word for it, you can see it for yourself. It's like having a public ledger that everyone can audit, ensuring fairness and accountability. No more hidden agendas or shady dealings. Then there are the lower fees. Traditional banks and financial institutions often come with a slew of charges that can eat into your savings. Since DeFi cuts out the middlemen, you can say goodbye to those pesky bank fees, transaction charges, and hidden costs. This means more money stays in your pocket, where it belongs. This makes financial services more accessible and affordable for everyone, especially those who have been underserved by traditional institutions. Imagine the possibilities for people in remote areas or those without a high credit score. But let's not sugarcoat things. DeFi isn't a magic bullet that will solve all financial woes overnight. Traditional finance has its weaknesses, and DeFi exposes them. The old system is riddled with inefficiencies and barriers that many people find frustrating. We're talking about limited access, slow transactions, and a lack of transparency. These are not just minor inconveniences, they can have a significant impact on people's lives. The current system often excludes people based on their location, credit score, or income level. This exclusion creates a financial divide that is hard to bridge. And let's be real, waiting days for a transaction to clear? In an age where everything is instant, this is simply unacceptable. That's just not going to cut it in today's fast-paced world. DeFi offers a glimpse into a future where financial transactions are seamless, transparent, and accessible to all. The battle for your wallet is on, and DeFi is making a compelling case.
Chapter 3. Now you might be thinking, are traditional financial institutions just going to sit back and watch DeFi take over? Of course not. They're adapting, and they're doing it in some pretty interesting ways. One major development is the rise of central bank digital currencies, or CBDCs. These are digital currencies issued and backed by governments, offering the benefits of blockchain technology while maintaining central bank control over monetary policy. Think of it as a digital version of your local currency, but with the potential for faster transactions and lower costs. But it's not just about creating their own digital currencies. Traditional institutions are also exploring collaborations with blockchain companies, integrating DeFi protocols into their existing systems, and even investing in DeFi startups. We're seeing banks partnering with fintech companies to offer blockchain-based payment solutions, asset managers exploring tokenized securities, and insurance companies experimenting with decentralized insurance protocols. It's a clear sign that the financial landscape is shifting, and traditional players are realizing they need to adapt to stay relevant.
Chapter 4. So what does the future hold for DeFi and traditional finance? This is a question that has been on the minds of many experts and enthusiasts alike. As we stand at the crossroads of financial evolution, it's crucial to understand the potential pathways and the implications they hold for our global economy. Well, it's unlikely that one will completely replace the other. Traditional finance has been the backbone of our economy for centuries, providing stability and trust. On the other hand, DeFi brings innovation, efficiency, and inclusivity to the table. Both systems have their unique strengths and weaknesses. Instead, we're likely to see a hybrid model emerge where DeFi and traditional finance coexist and even complement each other. This hybrid model could leverage the best of both worlds, creating a more robust and versatile financial ecosystem. Imagine a scenario where traditional banks adopt blockchain technology to enhance their services, while DeFi platforms integrate regulatory frameworks to ensure security and compliance. Imagine a world where you can seamlessly move between traditional bank accounts and DeFi protocols, leveraging the strengths of both systems. You could use your traditional bank for everyday transactions and savings, while turning to DeFi for investments, loans, and other financial services that require more flexibility and innovation. One area where we can expect to see significant innovation is decentralized insurance. Traditional insurance models often involve lengthy processes and high costs due to intermediaries. DeFi can streamline these processes, making insurance more accessible and affordable. Imagine insurance policies managed by smart contracts, eliminating the need for intermediaries and potentially reducing costs while increasing transparency. These smart contracts can automatically execute claims based on predefined conditions, ensuring a fair and efficient process for all parties involved. These protocols could offer everything from crop insurance for farmers in developing countries to flight delay insurance for travelers, all powered by the blockchain. This could revolutionize the insurance industry, making it more inclusive and responsive to the needs of a diverse global population. And let's not forget about the evolution of DeFi itself. The first wave of DeFi brought us decentralized exchanges, lending platforms, and yield farming. But this is just the beginning. DeFi 2.0 is already on the horizon, promising even greater scalability, security, and interoperability. This next phase aims to address some of the limitations of the current DeFi ecosystem, such as high transaction fees and limited cross-chain functionality. We're talking about cross-chain bridges connecting different blockchains, Layer 2 solutions boosting transaction speeds, and new governance models giving users more control over DeFi protocols. These advancements could make DeFi more user-friendly and accessible to a broader audience. The future of finance is being written in code, and it's going to be an exciting ride. As we move forward, the collaboration between DeFi and traditional finance could pave the way for a more inclusive, efficient, and innovative financial landscape. The possibilities are endless, and the journey has just begun.
So, there you have it. A glimpse into the transformative world of DeFi and its impact on the future of finance. It's clear that we're on the cusp of a major shift in how we think about and interact with money. DeFi has the potential to create a more inclusive, efficient, and transparent financial system, but it also comes with its own set of challenges and risks. We'd love to hear your thoughts. Do you think DeFi and traditional finance will coexist or compete? Let us know in the comments below. And don't forget to like, share, and subscribe for more content on the future of money.